Hey, it's Tom here, and welcome back to another episode of the Investing with Tom podcast. Now, in this episode, I speak to Natalie Ferguson of Hatch. Now, if you've followed my main Investing with Tom YouTube channel for any length of time, you probably recognize the name Hatch. If you are an investor based in New Zealand, I am almost certain that you will recognize the name Hatch. They are a platform that allows Kiwis to invest in large US companies in a really low cost way, and they have a great kind of modern platform for doing so. Now, they've been a long-term sponsor of my main Investing with Tom YouTube channel. This particular podcast episode is not sponsored, but they've been a great partner, and they're a company that I am fully supportive of and can really, get on board with what they're doing. So this particular episode was a really cool opportunity to speak with Nat and basically discuss some of the history of Hatch and how they went from an idea in a government organization, which was Kiwi Wealth, to eventually turning that into market research to understand what Kiwis would want in some sort of investment platform, and then going on to turn that into a startup business, growing a team of now about 60 or so people, and some of the challenges and successes along the way. So this was a really fun conversation to have with Nat, talking all things Hatch and kind of how the business got started, and also some of her philosophies on investing as well. So without further ado, let's roll this one, and I hope you enjoy. All right, Nat, thanks for joining me from your beach house in Wellington. How are you?
Pretty good. It's been a pretty warm day here. Just got back from the beach actually, so pretty nice.
Very nice. I'm quite excited for this conversation because I, on the use sort of my main YouTube channel, have been partnering up with Hatch for probably close to a couple of years at this point. I think it's been really cool kind of experience working with you guys, and I think a lot of people will know Hatch the company and maybe have invested on the platform or they've seen me talk about it, but I don't think a huge number of people know the story about how Hatch kind of went from idea to where it is now. So it should be fun to dive into this stuff. But maybe before we do that, can you tell us a little bit about your background? You're one of the co-founders of Hatch, but what were you up to before that?
I was just going to say we knew you before you were famous, Tom. It's funny that journey, eh? We all kind of started, well, not maybe started at the same time, but sort of rode this wave, and it's so interesting to see how everyone's turned out,
Yeah.
landed a couple of years later. I'm not from a finance background at all, actually. I have always been in tech and was always a little bit anti-establishment. I never had a job. I went to uni, hated uni, thought, why was it socially acceptable to send everyone to university? I was in those massive lecture theatres with 300 people thinking this doesn't feel the right way to learn. And so partway through uni, discovered computers, which sounded like this was a very long time ago. So back when everything, like there were no blogs, there was no software as a service. I remember when people used to say that, and I was like, I don't even understand what you're saying. But it was a long time ago, and I had never been interested in anything to do with computers, and even things like gaming and PlayStations. I still to this day don't know. But sometime during uni, kind of realized that this was the communication channel of the future, and I love writing, and I've always loved design, and so just started and started a company straight out of, well, during uni, making websites, and have always sort of been in the startup community, and done a whole range of things. And then I was kind of like, one thing that I hadn't done was work in organizations. I'd always worked for myself. So I spent a couple of years consulting and going around working in much larger government agencies and kind of corporates to figure out my gaps, because really it is a different beast. And kind of got to the end of that and was sort of thinking, what next? And met Kristen and Jared at the time. And we were given this opportunity to do something from scratch in a very different way within a corporate. So that's kind of how I landed here. It's sort of one of those stories of not necessarily having a concrete plan, but just saying yes to a lot of things and meeting different people and trying different things. And um, I've always been an investor as well. I was participated in the Zero IPO and then continued from there. So it sort of was the merger of two worlds that I believed really strongly in. So it was yeah, it was kind of a match made in heaven, really.
Yeah, that's very cool. That makes two of us that don't have finance backgrounds, and we're we're scraping by, so that's okay.
Well, I consider it a strength because I think when you're in an industry and you know it so well, you come from an internal point of view, whereas we've had to learn it. So you can kind of understand what people are going through when they are learning about this thing.
Yeah, yeah, for sure. And it's been quite cool. And I know Hatch have been pretty transparent, kind of right the way through with what you guys are working on and engaging with the community all the time, which has been a very cool part of kind of working with Hatch. And it's sort of like we're all like learning and just putting ourselves out there in plain sight. And I've had the same experience on YouTube. Like I watch videos of what I was talking about 2 or 3 years ago, and it's very obvious that you've come a long way, over that time when you go back so far. But um, I guess you don't realize it at the time. I don't know.
No, well, and this has been probably the biggest four years in finance in this country. When you think about when we launched, there were no US share markets in New Zealand realistically because the price was so high to even participate. The education when it came to financial literacy, I mean, yes, there might have been some textbooks. I think the Barefoot Investor might have put out their first book, but there wasn't the same level of plain English normal people talking about wealth building. So it's been a really epic couple of years for everyone.
Yeah, I think the timing was great personally for you guys. I mean, I remember probably 2017. I think I made my first investment in shares, which was just a ETF, like a New Zealand top 50 ETF. And then I sort of discovered the world of YouTube, and even then, it was very sort of US dominant, like a lot of US, YouTubers and so on. And you'd start learning about these American companies, and then you'd go to actually try and buy one. And I think at the time it was like 90 New Zealand, 90 US dollars, like 130 New Zealand dollars or something to even like get a foot in the door, which doesn't
Plus
work all that
foreign
well when you.
exchange fees.
Yeah, and it just kind of doesn't add up unless you're working with larger sums of money, and that's not always the case when you're just getting started, right?
Well, and that's sort of what led the costs have dropped, and I think technology has a huge part to play in that, and that's again a strength of companies like Hatch is that we come from a technology point of view, not a finance point of view. So we look at sort of the way the world is and go, how do we change that? So I think across the board, the costs of investing have lowered, and there was a good reason why they were high to begin with, but it is pretty cool to be able to change that myth that you have to start with a lot of money or it's not worth investing unless you have deep pockets. And that myth still sticks around to this day. So little bit of a long path to to switch that one up.
Yeah, cool. So how the idea for Hatch actually come about?
Well, yeah, like I say, we are technologists. So from our perspective, we were given a blank sheet of paper. We came into Kiwi Wealth, which is a government-owned organization, and they had a visionary CEO at the time who just saw that the finance industry was changing and the investing industry was changing, and and costs were lowering and technology was improving. And so we came in to do sort of a 3 month, Kristen calls it skunk works. I never know what the words are for various things.
I'm
And
familiar
at
with
the
that
end of
term, yeah.
yeah, and at the end of that 3 months, I'm not sure if they expected anything from us, but we pitched to them, this is what we want to do. And the way we got to that point was we talked to people, which is an often overlooked, very critical part of starting anything. We knew what our experience was, we knew what we wanted, but we actually didn't know what New Zealanders' financial literacy, their opinions on investing, their opinions on money. And I'm a very nosy person, and my background's in a lot of research and user experience stuff. So we just sat down and talked to people and broke down. It was very easy actually to break down people into types, and this is not age or gender or any of the usual stuff. It was actually around their, really for us, it was around behaviors and beliefs around money were the key traits that we could separate people into groups. And we identified that, especially in New Zealand at that time, I think only about 15% of the country had ever bought shares at all. So we'd found this group of people who had, and really were really passionate about investing in the share markets and really believed in the US share markets, but in the value of investing to grow meaningful wealth. And so we found this group, and they weren't necessarily, they were all ages, all demographics, and we just started working with them, saying like, what are you after? What have you been doing? Because I think with a lot of research, you can ask people leading questions by accident and get the answers you want. So we kept it completely broad and then started putting together some concepts. So we put together 4 or 5 concepts. One of them was fantasy football was really big at the time. So we sort of switched up fantasy football, and instead of having players, you had different investments. We looked at share clubs and what if people pooled their money. We did a very guided sort of financial advice style thing where you answer a bunch of questions and we would tell you what to invest in. And we did US share markets, which was just obvious to us as an access. And at that time, with this group of people, we were working really closely, not necessarily with the same people, but people like them. So we're constantly growing out this group of people who we were working with. And when we put the US share markets in front of them, just this really ugly old prototype, I was the one who did it, so it was terrible. And they literally grabbed my phone out of my hands, and that was when we knew it. When people were like, "When do I get to the top of this list? How do I access Tesla and Apple and all these companies that I love?" And one of the most common phrases we heard is, "I missed out on Amazon, I missed out on Apple, I missed out on all of these companies, and I don't want to do it again." So we pitched back to Kiwi Wealth. We want to launch a US share broking app, which actually wasn't our end vision. It was just what we call the wedge. It was the first step because we'd already seen so many gaps, but this was such an obvious place to start and grow out from there and grow our audience and grow the functionality, because we believe really strongly in holistic wealth and holistic health, really. And when you think about a whole human, there are so many gaps and they're so intrinsically combined that that we think there's so much opportunity still to grow an app that allows people to make smarter choices about where their money is and actually helps take some of the burden off them. So the US share markets was a very exciting opportunity to start, as evidenced by sort of the traction we got, but there's plenty more to come from there.
Yeah, very cool. And were there any sort of, in that market research phase, was there any one particular thing that really kind of got people, like fired up about this idea? Was it the companies, like you say, that they'd missed out on? Was it like I'm not sure if you'd even got to the idea of figuring out a business model or fee structure or anything at that point, but was it like low cost access, or it was a whole combination of things?
Well, for us, low cost was just a given because in technology being as it is, we'd seen Uber come and disrupt the transport business. We'd seen Airbnb come and disrupt the hotel business. And it's by being innovative, but it's also by taking advantage of your unfair advantages, which in many ways, when it comes to tech, is being able to do things much more affordably. But I think there were 2 things for us. Well, we actually say 3 things for us. And the foundations of Hatch have always been access, tools, and community. So access is the obvious, and for a very long time New Zealanders were cut off from access, and I still to this day hate the idea of New Zealanders being obsessed with property, and we rage against that because maybe we are, but what were our other options for a very, very long time? We had the NZX, we had a bit of the ASX, but we didn't really have a lot of other options. So part of what Hatch stands for is bringing access to great investment opportunities. Tools are the things that one of the ways we look at it is when you look at the financial elite, they have access to tools that a lot of us don't have access to. They have tax accountants, they have advisors, they have often family networks and private schools and all of these things that allow you to various education, all sorts of stuff that allow you to learn about and almost get a head start from everyone else. So again, as people who are in the tech industry, we're like, how do we add that? Because that was something that we got really loud and clear is a lot of our earliest investors, and we have this amazing core group who started with us basically on day one. Their gap was, they were the nerd at every party going, I want to talk about investing. And everyone thought they were showing off, but they weren't. They just had this like real interest in this thing. So adding sort of the tools into it, and giving people what otherwise would have cost too much or been inaccessible. So that's always been like our getting started course. We do a lot in education. We are doing every year much better tax reporting and making just like all that stuff that used to cost a fortune. We're trying to bring the cost down and make it more accessible in plain English. And then community is the last part. And it's something that, again, is really overlooked in the investing industry, which is that we're humans. This is not, money doesn't sit outside your life, it funds your life. So what we can do when we create an app like this is that's the functionality. That's the thing that you can do to buy and sell stuff and build your wealth. But what we're really giving is access to this incredible community, and you're part of it. You've seen it. Like, that's not us. That's this just group of hundreds of thousands of Kiwi investors coming together, and we sometimes meet up in person. We have our investors club. We have all sorts. We do webinars. It's all these different ways to connect people, and the number of times you find you're with another Hatch investor, and you're not even talking about investing because it's sort of side notes into various other conversations. And I just feel like that is something that often businesses, and especially financial businesses, overlook, is that we're talking to humans, and humans want to connect, and we want to share the things we're interested in, and there might be multiple reasons why we're excited about this stuff, but like, let's let those people come together and have those conversations. So that's from what we did, that initial research, and we've never stopped. We're always talking to our investors. I think we generally like to think we know mostly when everyone's happy with us, when a group of us not happy with us, all of that sort of stuff day to day. Those are the three big themes that came through that we're really missing in the industry.
Yeah, very cool. It's that that thing you said about the nerd at the party that's like talking about shares. I relate to that a lot, actually. It's, that's a lot of the reason why I started a YouTube channel in the first place. It's like I was getting really interested in this topic that no one else seemed to care about, so I just defaulted to the internet and started talking about it there. And suddenly you'd be surprised what people watch and listen to. So it's been quite
Yeah.
cool to see that sort of spread and become a little more mainstream, right?
Well, people, I think money, I mean, I have delved quite deep into money and behaviors and beliefs, and it is terrifying. There is so much shame and terror and fear associated with money. And I don't know if it's around the world, but in this country, there certainly is. And I think people are very interested in it. And some of our best received emails and campaigns have been when our end of year Hatch wrap, where we talk about what happened in the year, and people are just fascinated by what each other is doing and how they compare and all that sort of stuff. But it is, and we've been talking a lot recently about starting money conversations, especially with people who are interested in starting or have just started, and it's terrifying and we actually don't necessarily have the experience as a country to be able to sort of, if I was to suddenly ask you now how much you earn, like, that's like a horrifying situation, or to ask you how much you've got in savings, or to ask about your budgeting, like, it's just not conversations we have. So the idea of someone walking into a party and talking about their share portfolio immediately shrieks to a lot of people of showing off, or whatever it is that it's not. It's actually just another part of your life. And I've noticed since we've started Hatch, the more parties weirdly that I go to, and you start to find pockets of people talking about investing, but they just go in totally different directions. And so if that's something we can change in this country between you and us, we're pretty stoked to do it.
Yeah, it's same experience here. It's like I don't go to that many parties, but I go to the gym a fair bit, and it's like everyone wants to talk to you in between sets about shares all of a sudden. it's
I wonder
it's
if we need to reverse a little bit. Maybe I need to go to the gym a bit more until these parties. I'm getting what you're saying, Tom. I'm getting what you're saying.
it's a weird one because it's like a lot of people that, and I guess quite rightly in a way, but a lot of people just kind of jump to saying, "Oh, I don't know anything about that," or it seems really hard. It kind of, there's a weird analogy, and that's great timing because I was going to say it reminds me of the wine world a little bit, where it's quite like an intimidating thing when you like run into some person who's talking about all these fancy wines, and they can have some, I don't know, they smell like wet stone or plum or whatever, and you're like, I got no idea what you're talking about. I feel like that's how some people view the share market sometimes.
But I think you will know as well as we know, and you see it on our investors club all the time. We have probably, I think we're getting up to 15,000 people. It's just a Facebook group at the moment, and it's exclusively for Hatch investors. And we think that's really important because it means you have to have skin in the game. You're not here to muck around. You're actually here to share and be vulnerable.
Yeah.
And we have some very experienced investors on there, and not once have I seen in that community. And that's actually one of my proudest things about Hatch is when you get to a Facebook group over a couple of thousand people, it normally turns to a trash pile. Like, it's normally very unruly, or you have to come down hard with rules. We have one moderator, and the rest of us just go in there because we are interested. And not once have I seen anyone behave in a way that would make you feel uncomfortable to invest in shares. Most people are wildly open because everyone just wants you to join in. There's the odd time where people forget what it's like to learn. But everyone, without exception, I'd say, is in there to share knowledge and to learn themselves. And we all know what it felt like to start. And I think that sort of disproves that myth of the person at the party who's showing off, because no one thinks of themselves as an expert. Everyone, the more you learn, the more you realize how much you have to learn. So the more humble you get about what you know.
Yeah, and just while we're talking about the Facebook group, Nathan deserves a shout out for
Yes, he does.
keeping that thing or keeping that thing tame and everyone following the guidelines and so on. He does a great job.
That's the human thing again, right? Nathan's a human and he treats people like humans. And when you have that kind of shared community and it's not this company doing this corporate thing, it's actually a bunch of people coming together to share in one of their favorite topics. That's everyone agrees to that, and it's just so cool to watch how we've managed to grow it far bigger than a lot of Facebook groups, and it's still, for a lot of us, the only reason we go on Facebook now, which is pretty cool.
Yeah, is that a little insight into investing in Facebook? I don't know. We don't go on it as much anymore. Anyway, so how do you go from market research and getting these ideas and so on to actually turning that into a business? What did that look like?
It's so funny to think of now. We now have, I think we've got just about 65 people working at Hatch, but at that time did we have 5? We had a very small number of us, maybe 4. And we had decided we were going to do the US. We're going to start with the US. We obviously had a much bigger plan. We pitched for funding. And then I was the designer. Jakob, co-founder, was our tech engineering guru. We had Kristen running the show, and Jared has always been sort of BA, glue, everything that we need him to be. Ops, he was ops at the time. So and then we hired a couple of engineers. I think that was it at the time. And we built it. We built Hatch in 3 months, the first iteration of Hatch. And then we had to do 3 more months of due diligence because we were within a government organization who had quite rightly standards for what we wanted to push out to the New Zealand public. We had actually already done all that due diligence, but understanding that we'd only really just pitched to them we were under their name, that understanding that they maybe wanted the extra security. And so then we just launched. And I remember the day we launched, and at the time we had a whiteboard behind our desks, and we counted, like every day we tracked how many people signed up and how many people made their first investment, and we'd be rubbing it out 3 times a day. And there was quite a bit of news coverage at the time about it because we were the first. And it's just so funny to think back to those days. But we launched it, and we were very much as a tech company about the MVP. And so we had very much just market orders at the time. There was so much, like, we didn't have trust accounts, we didn't have kids accounts, we had the basics. And our philosophy was always, because we are humans and we want to work with humans and we're here to solve human needs, not necessarily push our financial knowledge on people. We wanted to build Hatch with our community. And that's probably why our Facebook group, as well as it does so well, is that our community built Hatch with us. We always were, we used a tool called Intercom for communicating with customers. We were always tagging, like Kristen and I were our customer support for a long time. I think we had one person quite soon after we launched, but we'd always be tagging what people asked for. We'd be in the conversations, we'd be picking up the phone. So we had probably several hundred people sign up in the first week, I think, or maybe more than that. I should know these numbers. And from there on in, we just iterated with our customers as to because it's, what we all wanted. But it was really that simple. Like, you just hire a alpha engineering guru, and like they'll build it real quick. and also we wanted to pull on to everyday concepts, because one of the things we all felt, and even though a few of us had invested for a long time, is that as soon as you called anything finance, it got like, there was like so much crammed onto a page, and tables and charts and all sorts of things that were wildly intimidating. And what we found is that most of us shop online quite a lot. So what if we made a UI that was much more related to the things we were used to doing, even though we were only at that point working with experienced investors? What if we created something that took all the faff out of investing and let you focus on what was important, which is the investments you were investing in, without all the stuff that A, made you feel stupid, and B, kind of like, the tiny fonts and stuff just like didn't need. But obviously, as we've grown and our audiences have grown, we've had to evolve that a lot. But very first iteration of Hatch was also quite colorful, but very straightforward, very simple.
Mm-hmm. Yeah, cool. And just quickly, what sort of like what year, what period of time are we actually talking about when Hatch went live? How long
Was it
ago was that?
2018? Was it the end of 2018? I feel like it was like August or something.
Mm-hmm.
2019, 2021. Yeah, I feel like it was, I think it might be August. I think, yeah, we rolled it out for a couple of months leading up to August 2018. So I think it's about 3 and a bit years, I think, we've been live.
Mm-hmm. Very cool. And how to go from what was the transition from putting tallies on a whiteboard through to presumably you're well past that stage now? What was the growth like? Was it we were talking a little bit before we hit record here about YouTube growth, and there are a couple of periods of time where there were huge tailwinds and people suddenly got super interested in investing and so on. Was it steady growth? Were there times where it just kind of took off and you had a lot of tailwinds? What did that sort of look like, and what were some of the growing pains along the way?
Oh, so many growing pains. Um, we we have long since acknowledged, and I don't think we expected this at the start. So a couple of things that we've disproved. One, at the start when we were interviewing people before we launched, we had expected that most people would invest maybe 2 or 3 times a year because that was the current behavior. What we didn't realize is that by launching Hatch, we were changing behavior, because by doing all the things that we did, we allowed people to invest a lot more regularly, and have a lot more diversification in their portfolios, all of that sort of stuff. So that was quite interesting. I think we actually grew quite steadily for the first wee while, and we kept a very tight team. I think we went into the first lockdown in 2020 with 10 people on Hatch. So we'd been a year and a bit, and we'd run the whole company from marketing through to customer experience, customer support, engineers, design, with 10 of us. So we probably stretched that one a bit too far. And I think the first lockdown was probably our biggest spike. And I think that was probably experienced by the whole industry, that suddenly there was a drop in the share markets. Everyone was stuck at home. There was nothing else on. Probably most importantly, and this probably harks back to something that we want to talk about, is gambling was shut off. And so there was all these people sort of going, what next? And so I remember, I actually don't necessarily remember too much of that lockdown, because how long was it? 4 weeks. I think I slept, but we doubled our team size over lockdown. We had to hire 10 people, which is a real challenge. While we were, and remember, it feels normal now that the pandemic is here, but that was brand new. Everyone thought we were going to get really, really sick. We thought that the share markets were going to drop for a very long time. We thought all sorts of things, which now, and it was a very short time frame, and we were overwhelmed with people signing up. We were overwhelmed as a small team and trying to onboard 50% of our team. So there are some real troopers who joined Hatch at that time, both from customers and from team. We still have most of them, all of them, most of them. And I mean, huge respect to them, because that must have been the weirdest way to start a job ever. Not only were we in lockdown, they were working for a startup that was completely overwhelmed, in an environment that was like nothing we'd ever seen. And and it's so cool to see people now sort of where we're at now. Growing pains wise, I always thought when you started a company, the hardest thing was going to be finding what to do next, and finding customers. But what it actually is, the hardest thing is building a culture that represents the way you wanted a culture to be. So, and changing the culture to adapt to the people who come on board. So we started with exactly that: tools, access, and community. We had an idea of working alongside our customers. We had an idea of being the best investing platform in New Zealand. And by that, we mean the best investing experience that meets people where they're at. We wanted to be the best US share market platform for now. As we add more stuff, we want to be the best at that as well. And then you introduce 10 people who have all sorts of different backgrounds and expectations, and you have 2 minutes a day between onboarding people to try and explain. And that was just that was really hard. And then we jumped from 20 last year. I think mid last year, that was when we made the jump from 20 to 65. So hiring 40 people in sort of 6 to 8 months. And tripling your team size. I read something a while ago about doubling your team size in a year is considered hyper growth, and we tripled ours. And so what you're doing is bringing all these incredibly talented people who are very ambitious, who have all sorts of ideas of what a startup looks like, and all sorts of ideas about what Hatch looks like, and quite often from a remote environment, trying to get one idea of how we work and continue to deliver the experience that our customers knew us for. And that was really hard. And it's only been in the last couple of months, and actually even this year, that there's just been this, like, I've been saying it a lot, but I used to feel like when people talked about, we have the best team, that it was sort of that like paying lip service to, you should say it. And I am blown away by our team. So that's been the hardest thing, because you're dealing with people who are so passionate about what they do, and trying to get everyone thinking, moving the boat in the same direction, believing in the same thing. Communicating is different when you've got 10 and 20, and we, weren't always perfect at, very far from perfect at how we manage that. And yet now I just look at this just sort of machine of people who are just so kind and clever and funny, and just get on and do like better than I could have ever imagined and seeing some of the stuff coming out now. It's just, so all of that to say is that those really hard times and the growing pains, that was probably the biggest one, but so worth it coming out the other side. It's the coolest thing I've ever seen. And seeing our community as well, seeing sort of the early adopters. And then, there's times where you're just exhausted and it feels like we have a huge compliance obligation. And there are just times where you just feel like there's hit after hit with everything gets harder, and you never have enough time and you never have enough people. And then you sort of come out the other side and you just go, oh, that's why we do this. Like, we're obsessed with doing this, because the hardness is the exciting part. You just sometimes forget it when you're exhausted. So I'd say that.
Mm-hmm. Yeah, very cool. And so what, did the culture change suddenly tripling a team, or do you think that, you brought the right people in to keep the culture kind of how you wanted it, or has it even improved since then? What's that look like? Because suddenly going from 20 people to 60 people, you get a lot of new perspectives on life, and by adding 40 people, I can imagine.
Absolutely. The culture's changed, and we actually encouraged it. We have always had an attitude, one of our values at Hatch, and we are, it's funny when you talk about values, because a lot of people think it's something you sort of post on a wall, is ownership. And we also very, very much have always had an attitude of not necessarily embracing failure, because I think you should learn from failure, but being really, really open about when things don't work. And that's important from a product point of view, from a marketing point of view, but also from a team point of view, is being really comfortable, and like being comfortable being uncomfortable, but also being really okay when things aren't working. So once we got to like 20 something people, we just sort of realized that there was a bit of a divide between almost the old guard and the new guard. So we brought in people. We brought in this incredible duo and just said, help us, like, come and do some workshops with us and tell us what we're getting wrong, and ask everyone, and have this really transparent environment where people could feel comfortable saying how they felt. And so we did it actually a couple of times, and obviously it went down really well because one of the things that I think what I've now realized, the hardest thing when you're growing like that is building trust. And trust is built by 1,000 things, right? Like you build trust slowly and you can break it really quickly. So we just hadn't worked together long enough. Like we had all these brand new people who didn't know each other to trust each other. And what we found is by continuing to be very clear when us as a leadership team haven't got it right, because of course we haven't, because we're human too, and we're learning as we go. But also being really clear when, like, the team, as a team, we haven't delivered what we want to deliver, and that's okay. There's it's no one's to blame. It's what can we improve. That what we've got to now is we have huge trust, and I don't think I kind of realized that until we're a remote company at the moment. We sort of decided when Omicron came in that let's just go work from home. We'd set up all the right structures, and it's only been now that I realize, like, everyone, it's almost like they've stepped up a whole other level, and just you just see and just that we have an extremely high trust environment, and well deserved to be an extremely funny environment. There's, like, at any one day there will be a huge argument happening about, what is it, wheels or doors, or whatever else is happening on the day, and people will be like right in it, and then it will pivot to something else, and the only complaint we're getting at the moment is people want to spend more time around each other, because we actually really like hanging out with each other. So so I think that to me is the key, is it's sort of letting go of your own ego. We used to say no egos, but we think we all have them. But just being really calm with, like, yeah, I mucked that up. Sorry, everyone. I'm happy to, like, put my hand up and say it. And then what you start to realize is everyone starts to say it. And then next thing you know, it's pretty easy to get through pretty much anything as a team.
Yeah, I love that. That's one of my pet peeves, I would say, is people not just putting their hand up and saying I stuffed that up. It's and then you sort of go down this in this rabbit hole of it's almost like, if you don't want to admit that you did something, you sort of, I think, can get in a habit of doing that sometimes, and all of a sudden you're having to remember all these stories you made up around, no, that wasn't me, and so on, and then you get real stressed out. So honestly, it's the best policy, right?
Well, and also I think you don't always know when you've done something wrong, because quite often it is just, even the other day there was a situation where I'd announced at design meeting something about, we need to tweak this thing because we're not doing this process right. And someone fed back to me basically immediately, like, oh, that made me feel really bad. Like, I thought that we were doing quite well. And I was like, oh my goodness, no, I didn't mean that. What I meant, but I was rushing through it and I was flippant. And thank you so much for letting me know. And I think that, because quite often you can walk away going, that was a very well received, clear message, and everyone else is like, oh. So I think just even having that environment of being like, yes, we put our foot in it all the time, but we normally mean really well and generally don't mean what you think we mean.
Yeah. Yeah, I like that. This may be switching tack slightly, and I'm not sure how much detail you can go into here, so feel free to tell me if you don't want to talk about this stuff. But I mean, what was sort of the financial side of growing a business like Hatch like? I mean, were there rounds of raising capital? Was there good support right the way through? Were there kind of roadblocks in that area that you can speak to at all?
We have had probably one of the most interesting paths to getting here that I can imagine. I mean, I'm a pure startup person usually, so starting not only in a corporate but in a government-owned corporate is very different. And we were kind of counter to Kiwi Wealth's culture in general, because they were very much a give us your money and we know what's best to do with it. And then the idea of starting with the share market thing was like, but like I said, we had this visionary CEO there. So basically it was as simple as, we operated as completely a standalone business. We came up with our budget. We pitched for funding. Kristen pitched for funding with the board. And if her pitch, as with any investor, worked, you got the money. We ran off the smell of an oily rag for a very long time. And I would say that's probably, hand on heart, I was probably a driver of that, in that believed in small and agile over and being creative. But I think maybe we pushed that quite far. And so we probably, I can't give you actual numbers, but we ran off a very small budget for a very long time. And really, the biggest cost when it comes to a business like this, or I suppose any tech business, is people and growth, and finding the right people, and making sure you pay them what they're worth, which we've always been a big fan of, and then being able to access, especially with something when it comes to something like investing, where there is a huge amount of behavior change involved, and you might be introducing people to something that they never thought they would be involved in. There is a long lead time, and often a lot of nurturing, and that that costs money. So yeah, that's probably without giving you actual number figures, those are kind of the big things. I would say if we were to do it again, we probably could have invested a lot more a lot earlier. But in saying that, there is a huge amount that we created by being smarter, and I think that's also really important.
Mm-hmm. Yeah, I like it. And hindsight's 2020.
Yeah, yeah,
It's obvious, and yeah, it's much simpler in hindsight that you should have bought Amazon and after a 90%
absolutely.
crash in
Yeah.
2001 or something. So there you go. And what's the transition on sort of away from Kiwi Wealth been like? Has that changed much in the Hatch business, or will it change a whole lot moving forward?
Well, that was kind of, I suppose that's the other thing. It's like money is one of the barriers to growth. The other one, in a business like this, is access to um, different markets and different investment opportunities. And there's two different ways you can go down. You can build it all yourself, or you can partner with people. And we went down the partnership route. And what that means is, in a technology layer, you need to have good tech partners with APIs and the ability to integrate and send information back and forth. Then you have a compliance and privacy layer, which is who owns what information, who should own what information, who needs to know what, how do we make sure we're all compliant, and protecting our customers. And then you have the actual financial layer, which I had completely underestimated, which is how do you actively connect into different share markets? What does the money flow look like? What does again, with data, who owns the data? How does that connect with your other data? How does it connect with the other money flow? If you're accessing various share markets through various people, and then all sorts of other things we add on top of that. So I would say, in my opinion, there's those three layers. We were missing the third, and we spent a couple of years actively looking for partners to give us access to a lot more investments. And it's really hard to find the right match. And so we knew that was our next step, and we knew that while Kiwi Wealth was a great incubation place for Hatch, and were extremely hands off and extremely supportive, and we had a partnership model with them too, where we had access to advice and legal and risk and all sorts of other things. The brand, a really trusted brand. We needed to let Hatch fly, and that meant we needed to get a better back end. And so for us, it was obvious to move to an organization that's their bread and butter. So for us, it was sort of the perfect state. It is interesting. It is interesting being acquired, and it is a different company. But we walked into FNZ with 3 weeks to go before the Christmas holidays, so that was pretty interesting. But I think it is a matter of, for us, we are and always have been Hatch, and we love working with exceptional organizations and exceptional people who do what they do well. Our job, and our one and only job, is always to look out for our customers and our people and deliver the best experience and be true to our vision. So in some ways, nothing's changed. In other ways, we have access to this powerhouse back end, and a whole other tech stack and a whole bunch of stuff that we'd probably have to do anyway. So I would say that's probably actually the biggest change, is the possibilities, really.
Mm-hmm. Yeah, cool. It seems like it sort of sets you guys up for the next phase, right? Like I
Mm-hmm.
know again, in the Facebook group, you guys are getting ideas thrown at you left and right all the
Yeah.
time. So I don't think you'll be short of those. Is there any teasers you can give us on things you might be working on, or you're tight-lipped on most of that stuff?
No, I can give you. So like I said, we've always considered the US share markets to just be the start. And at the moment, what we're doing and what FNZ, I don't know if people know a lot about FNZ. It's a New Zealand company, but they are actually a full global company now. They're a wildly successful organization. Um, and they power the back end of a lot of investing platforms around the world for a lot of big organizations. Like Hatch is a tiny, tiny fish. So what our plan has always been is to create the smart place to manage your money, store and manage and grow your money. So for us, it is just a matter of what order to roll things out in and getting things ready to go. So obviously we want access to new markets. And that's in some ways we call that a hygiene factor. We know that there's plenty more room, like we've talked about. We're 4 or 5 years really into the retail investor revolution, so there's so much more to do there, and there's so many more ways we can make investing more accessible, make it more affordable, make it a more delightful experience, set people up for long-term success more. So access to new markets is an obvious one. It's actually quite interesting how many markets people are interested in. So there's that, and not necessarily just markets. There's also other investing opportunities. There's the likes of funds. There's crypto. There's what we call the over-the-counter markets, where companies who don't want to list on the major ones. We've got NZX, ASX. There's all that sort of stuff. So that is has always been on the agenda. And what our primary job is at the moment is to have a key group of people just focused on integrating in with what FNZ's back end and sort of unlocking all of that. So no timelines on that. The integration, like I say, because there's the financial layer and the tech layer, there is so much to do. So from our perspective, that is the focus. But until we're sort of further along, we don't know the order of things and how long it's going to take and all of that sort of stuff. But it is very much underway at the moment, is and the reason why we came here. On the shorter term scale, what we believe Hatch's superpower is being the best investing experience and being the best US share market experience. So for us, that means how do we take what we've got, which we've iterated on for the last couple of years, and transform it into being the absolute no brains, hands down best. And so there's a bunch of stuff we're doing. Our design team is working on what we call a design framework that basically allows us to sort of modularize everything we do. So that means anytime we want to roll something else, it's way more consistent, it's way more streamlined, and it's way faster to build. So they're working on that. We also are refining a whole bunch of stuff that we've done over the last few years, things like themes, which is a really low, an easy place to land if you're a new investor, that rather than trying to pick individual companies, you can still start with things you're interested in and have a much easier way to browse. We've launched a discover page in Hatch, again, for people who are learning about investing, but even for people who know a fair bit about it, to keep up to date with the sort of things that we're doing, but also find sort of educational material, and again, be guided to how to make your first investment or how to make your second investment. There's always that gap between once you've got over that first one that you kind of find for a while, and then you sort of hit a couple of $1,000s and you start to go, oh wow, this is really serious money. What do I need to do next? So we've got all of that stuff kind of coming out. We've just changed all our buttons to purple, which is lovely because it fits with our brand, and it is actually quite meaningful in the sense that having a beautiful experience is really important, but actually it is just a symptom of sort of rolling out this kind of much more much more sort of mature product. I think that's the stage we're in. So yeah, so all of that's coming up, and I'm not going to give you any ETAs on any of it because we are still very much, like I say, 3 months into our new home. There's a lot to be done and a lot to learn, and all I can say is that we have an exceptional team of people who have dedicated every waking hour basically to figuring out how we can get things into our customers' hands as quickly as we can, in the best way as well. We don't want to deliver something that's mediocre.
Yeah. Yeah, very cool. It's exciting times. And I should say, I noticed the purple buttons a couple of days ago. I think it was a couple of days ago. So nice work
Yeah, it
on that.
was. It was.
And if you ever need a beta tester for any of this stuff, put me on the list. Just I'll put
Excellent.
that
I
out
mean,
there. Great.
you're already on the list, but yeah, and we will be, because that's one of the ways we've rolled out most of our stuff is we get a little group and they help build it with us. So absolutely, of course, you're top of the
Yeah.
list.
Very cool. All right, I want to change topic slightly again, maybe away from Hatch a little bit, and switching more back to Nat. I mean, how do you invest?
I am, I would say, a non-typical investor. So like I said, I started with actually, no, this is why I started. I started with the Zero IPO because I was in the tech community. I had a startup at the time. I saw what Zero was going to do. Like, you can see it if you're in that industry, right? You're like, accounting is broken. I had a number of businesses where, we were using awful accounting software. It was so expensive. It was so hard. It was so painful. You hated it. You didn't have an accurate idea of how much money was coming in and out of your business. You had to like wait till the end of the month, and it was awful. So at that time I was just like, it's a no-brainer, and I didn't know anything about investing. I don't think I'd ever, I think I just bought my first place. Like, I'd bought an apartment, so I'd invested in property, but I was just like, I want to own a slice of this company. And I just felt so strongly. So I actually went to my family and said, this is terrible. I'd never do it anymore. But I was like, invest in this company. And at the time, the blocks that they were selling in the IPO, I think were about $10,000. Like, I think you had to invest a minimum of $10,000, which
Right.
I didn't have. I just bought an apartment, which nowadays seems like an absolute bargain. But at the time, I was a single lady. I was like 23 or something. I was like, I've just spent more money than I ever thought I'd possibly spend. I had a business with employees that I had to pay every month. $10,000 was too high a barrier. So mum and dad and my little sister and I bought a family parcel. Basically, we split it between us, and so I think I got $1,000, which was a huge stretch for me at the time. And then watched the journey of Zero for about the next year as it kind of went from $1 a share to 80 cents a share. And that was probably my first big lesson, is because I believed so much in the company and I didn't know anything about investing. When it dropped in price, I really didn't care. And I remember at the time, all these people I knew selling up for 80 cents and losing 20 cents a share. And I just had no interest in that, because I was like, no, it's going to be fine without knowing any of the mechanics. And then I did what sounds very similar to you, because at the time I didn't know anything about individual companies really, and I didn't care to look. I wasn't. I was investing in my own business. I wasn't really interested in looking around at other people's, but discovered SmartShares, and so I had money sitting in a bank account and was earning next to no interest, and saw the New Zealand Dividend Fund, and saw that they were paying, I don't know, whatever it was, like 4% in dividends a year, and just thought, like, what if I took half my money from my bank account and just put it in this thing that, even if it didn't do anything, it seems to be paying out a lot more. But I think that's kind of always been my approach, and maybe it is starting my own businesses, which is, the most risky thing you can do. That everything else didn't feel that risky. So I stuck with them for quite a long time, but then it's slowly, like, I did the whole, like, you put the same amount in every month. Didn't know it was dollar cost averaging. Didn't know it was pay yourself first. Just did it. And then very, like, over time, and this is one of the things that I'm in a huge advantage of now, is I've been investing for almost 20 years. So I actually know when I say the value of compounding gains, of compounding growth, and the value of paying yourself first, and the value of dollar cost averaging. Like, I've experienced it, and I think it's one of those things you don't really understand till you see it for yourself, that, those tiny little $50 a month into a couple of funds, and it seems like nothing for so long, and then it drops and you're like, everything's red, and you're like, oh, maybe this is a disaster. But then over time, I sort of found a couple of other companies that I liked, and so I put money in them. I'm a real chatter. I don't know if you picked up on that. So if I was ever out with anyone and they worked for a different company, or they'd started a company, I was always the first to be like, tell me more about it. Why is it so great? And quite often I'd base my investments off that as a starting point. It wasn't my finish. It was like, I would go and do a little bit more research, but not, all your financial analysis, just more like, I'm a growth investor. And what did Kristen call it the other day? it's sort of that future investor of like, if I think that this industry is going to be disrupted, I can see that. I don't really care about your balance sheet today as much, which I know for other people is really important. And so then over the years, I just sort of saw that, the red times got less and less, because even if you had a 20% drop, if you'd been building up by 10-15% a year in growth, those 20% drops were just like a drop on your gains at that point. So you sort of saw greener and greener, and those $50 a month, you get more obsessed, so it turns into $100 a month, and then you add another thing, and next thing you know, you've got some serious money invested in shares. And I therefore kind of took a kind of what seemed intuitive to me at the time, which turns out is just, my generic laziness of don't touch it, don't look at it, just keep doing it, and it sort of seems to work out. And so then ended up at Hatch, and obviously got really excited about a bunch of companies in Hatch, and a lot of the exchange traded funds, the baskets of investments that are pre-packaged for you, which is sort of like the smart shares things, but on the US share markets, a lot lower fees. And sort of just kind of keep muddling along like that. And I say muddling along, and I actually am making a point now as a female investor of not underplaying that. I have a substantial amount of my personal wealth in the share markets, and I don't look like a normal investor. I don't talk like a normal investor, or the mythical investor. But I would say that my success as an investor is pretty good by just following a few simple rules, compared to a lot of people I talk to who you'd think are much better than me at investing based on my description just now.
Yeah, very cool. It's actually it reminds me a lot of like Peter Lynch style investing. Managed the Magellan Fund, I think it was called, in the 70s and 80s, and made like almost 30% a year. He's written books that are, have almost like too simple to be true type ideas about how to invest. Like he talks about making, I think, 10 times as money or something in Dunkin' Donuts, because he saw more people over time buying donuts and he saw them,
Yeah, I mean, I
opening more
agree.
stores and all that. Yeah.
Everyone thinks it has to be this complicated financial analysis, and I understand that for some people that's what works, and like all power to them. But I've been a obviously huge fangirl of Cathie Wood, who runs ARK Investments, for a while. And it's sort of the same conversation. And I think Zero is just such a prime example, and I always use it because I don't know if you followed the news at all. When you've invested in a company, you tend to care a lot more about it because you're a part owner of it. I remember following that news for a decade. That was a long time to follow. And now it seems like a done deal. And everyone looks back and goes, I backed it. I knew what was happening. If you Google any news articles from that decade, you would think that company was about to fall over. Like, no one had a positive thing to say about Zero because they weren't making money, because no one understood what software as a service was. No one understood the scale. No one understood the marginal returns. And so like I was just looking at all these news and looking at this company going, no, this is not the same thing. Like, this is totally different. And I think seeing Cathie Wood now, and her funds have dropped in value quite a lot, and people were like, oh no, she's made a big mistake. And I'm looking around going, Uber disrupted the transport industry, Airbnb disrupted the hotel industry. We're looking at humans, like it or not, are going to space. We've got fintech, we've got financial technology coming in and changing that industry. Every industry is being completely disrupted. I believe quite firmly that I don't really care about what their financial returns are in the next year. I don't even think I know if it's going to be companies who do it. But I do know that the world in 10 years is not going to look anything like the world. The fact that we're sitting here on a video call talking to each other in real time, and that's normal, wasn't normal a couple of years ago. Like, all of these things I believe to be true. And I think for me, that's like the most exciting part, is like, what could the world look like? And I just don't think I really care. Like, when you see the news and you see, things are up and down in a particular day, just intuitively to me, it's like, so what? Like, the future is quite clearly going to look different. Do I care about the, financial returns of a company this quarter? Not for me. Like, I'm not going to sell it because I back it.
Yeah. Yeah, I like that. I think, excuse me, I've always come from it from the more analytical angle, I'd say, because I was a bit of
Yes,
a
you
maths
have.
nerd at school, and I'm becoming more like you, I would say, in the way that I think about business and investing. Like, and I've still got friends and people I talk to that are very analytical and just dive straight into financial statements and that sort of thing. But like I'm looking into a company in the UK at the moment, not a stock tip, people listening, but there's a company called Naked Wines, which great name by the way. But yeah, I'm trying to. I've found myself more and more just spending a lot of time trying to understand how the business works and listening to interviews with the founder and then now the new CEO before I even look at evaluation in a financial statement. I think
Yeah.
that's quite important as a way to approach it. And Zero is a really good example because, I mean, even when I was started investing maybe 4 or 5 years ago, I was seeing those same people saying, Zero doesn't make any money, their balance sheet looks terrible. And now understanding more about the business and seeing Zero used in the company that I work for, it seems more and more like a no-brainer looking back at it.
What?
And when you
Yeah.
tie the financial statement part into that, like Zero doesn't look that profitable, but when you get into the actual analysis, they spend boatloads on marketing and
Mm-hmm.
presumably they can turn a lot of that off at some point because it's a very sticky product. Like after people come in the door, it's hard to go out the door. And I think
Absolutely.
it's Rod Drury, the founder of Zero, isn't it? I think
Mm-hmm.
he said something to the effect of like, if they do run into financial troubles, like we can always swim to the side of the pool. I think he said something along that lines, with the
Yeah.
marketing spend and so on.
Wait, I think maybe that's what it is my unfair advantage as an investor is being a business owner. And I think and maybe I do underplay it a little bit when we talk about sort of, I can see this business looks good, but it's all those things like you say, like if you understand what software as a service is as an industry, you know that once you get to break even, every new person, it doesn't cost any more to add them. Like you've already got
Yeah.
so you understand that. You also understand the value of strong leaderships and visionary founders and visionary leaders is these are the guys disrupting the world. So if you understand them and what drives them and what motivates them and their track record, that says a lot. Yes, absolutely having a good war chest for when times go wrong. Or like I always use Apple as an example, and again, it's not it's just an example of a company that I think is a good case study in adaptation. Like when Apple first came out, they created a computer, and it was a beautifully designed computer. And then the next stage was to create these other gadgets, and they weren't the first to do it. They like basically copied the iPhone, but they knew they did what I would like to think Hatch does is they go, the thing is not the thing. Like the smartphone wasn't the thing. It was like how the smartphone worked with humans was the thing. And so they did it better. And so they did that. And then they created like iTunes Store. And then the world changed again. And they were the first to adapt to like streaming and then like having an app store. And then even I saw the other day, now their revenue is now completely different sources than it was even 10 years ago, 5 years ago. And I look at that and go, that when one company can adapt like that, that says a lot more than what they might have achieved financially in a year to me. And that's because I understand and I have experienced what is important in running a business, almost like what we started with Hatch is it's not actually about, profit and loss. It's often about the culture you create or the customers you have or the community you've got and the fact that people want to buy your merch or whatever. So yeah, so I think that to me is why maybe it came more intuitively than maybe if you have a maths background, it works much better for you to go down that path. But I think there is a combination in there. And to me, the math stuff, other people do it. So I can just read a quick article online and sort of see the numbers if I want to.
Yeah. Yeah, I agree. I think the right answer is probably somewhere in the middle between the maths nerd and the hardcore Kathy Wood, I would say. That's where I tend to land.
I
Do you
agree.
think your stories sorry, quick question for this one. Have you managed to hold on to those Zero shares all this time?
It's been a journey. I've still got those first shares, absolutely.
Love it.
But I also bought more when they were $10 and more when they were $15. And one of my biggest investing regrets is, they like shot up in price. And the first time, one of the things everyone talks about when it comes to investing is losing money. But the one of the biggest lessons I've learned is it sounds really crazy, but making too much money too quickly. That when you've bought shares for $10 and suddenly they're worth 20, and you're like, I have doubled my money and I've done nothing. And it is a mind blowing thing that you're like, I'm used to working for every cent that I make. How do I suddenly get free money? Like, it's super weird. So along the way, I sold every other share I'd bought in Zero, apart from the original ones, which I'd always had locked away. And I will never do the maths on how much money I would have had now had I just held on to the shares in a company I believed in rather than selling them because it felt like the right thing to do. But I've also heard of another situation, and I've done this as well, where I invested very early stage. I've bought into a few IPOs now, and someone gave me very sage advice early on, which is when they hit double or 1.5 what you invested, take out your initial investment and the rest of it's play money, so you just never touch it again. So there's all sorts of different ways you can kind of go about that thing. But no, absolutely. Yep. You'd probably still be talking to me, but I would maybe be on a different beach if I.
Fair enough. Yeah, and I don't mind those types of ideas. Again, the take your initial capital off the table and hang on to the rest kind of thing, and just go along for the ride. There's a part of me feels that that's just like intellectually lazy, but I get the psychological side of it. And that story reminds me of there's an investor I follow very closely called Guy Spear, and he invested in like an Indian credit rating agency. It sounds very boring. It's like the equivalent of Moody's or S&P in the US. He invested in a company called CRISIL, which is the Indian equivalent. And he says, the dumbest thing he pretty much ever did was woke up one day and decided he'd made enough money in CRISIL and sold it. And it's up like 100 times since 2001 or something.
But then isn't the thing, for me, it's always been like, I am inherently lazy with most things. I like to get some stuff done, but like, I think sleeping at night is very important. And so I think nothing is worth, you never know what's going to happen tomorrow. And while it's really good to set yourself up for the long term, you also do not want to live your life worrying about the long term. So if there is a reason why it's a good idea for you to sell today because you'll sleep better at night, I don't know. I just don't believe that your whole life should be optimized around maximizing your returns. There is a balance in everything. And it's sort of the age-old argument of, do you pay off your mortgage, or do you buy shares, or do you buy a house, or do you buy shares? All of that sort of stuff. It's like, does it matter? Like, you'll never know the B test of whatever you do. Like, just pick one and pick what's right for you. Pick what will help you sleep at night, and sort of maybe optimize for that rather than kind of every cent on the table but living a miserable existence.
Yeah, I agree. I completely agree. Do you think your story of sort of getting started investing with smaller amounts of money and just slowly contributing more and more and more over time until it's quite substantial, do you think that's the typical Hatch investor experience as well?
No, I don't think there is a typical Hatch investor. I don't think there's a typical investor, and there are some character traits or behaviors that we see a lot. We've broken our audience down probably into 3 major groups. We've got the extremely experienced, extremely successful career people, often a little bit older, but they don't have to be. We have actually a lot of very successful people in New Zealand. We like to bet above our weight here. And they just, money management's just part of their life. Like, you've got money, you need to manage it. So investing is very much just a practical part of their lives. Often they have someone managing a lot of it, but they kind of, have backed themselves throughout their entire careers and their entire lives. So managing a bit or a lot on their own just makes a lot of sense, and it's kind of fun and a hobby. Then we've got sort of our initial core base, who are people who they're the investing nerds at the party, the people who just see a life. And this is actually what I think is most interesting, is investing as a hobby, but they will almost unanimously tell you that they don't invest because it's a hobby. They invest because they believe in living their best life, and they believe in controlling their destiny and not working till 65 or not having to, and having the ability to make the choices they want to make. So there's that group, and they're normally, because investing is a hobby, they're pretty savvy, but they're also generally quite humble and are interested in learning more, and recognize the more you learn, the more you need to know. And then we have this third group, which to me is the most interesting, because it's the people I'm normally surrounded by. who are super not confident, and they either have completely not ever invested before, and think it's not for them. They think they don't have enough money. They think they don't have enough time. They think they don't have enough education. They have like a million excuses, and or they just don't even acknowledge that this is something. They might have heaps of money in a savings account. They might consider themselves a terrible spender, which is a myth. And that group, or the other two groups, are fine. Like, they just get on with it in whatever way they want to. But the last group, one of the things that we really spend a lot of time on is convincing people you can start small, because that's one of the myths. But what we tend to find once, like, it's sort of the personas of people starting, but once people start, regardless of if you're really conservative and anxious and worried about making a mistake and all the stuff that, if you are one of those people, you think you're alone, you are the bulk of people. So just like give yourself a bit of a break and realize that you haven't missed financial education. Everyone missed financial education. You're not stupid. People use terrible jargon, all of that sort of stuff. Once people start, what I find and what we often say is, that's all you need to do, start. Because once people do start, we find behaviors merge very quickly. And what you do, your $50 a month, then you go to $100 a month. And then next thing you know, you get such a kick. We call it almost the shopping high. That high that's like, when you click buy and all that sort of stuff, you get it from investing. So naturally, you change how you invest, and you find that extra money, and you start to go, oh, could I do if I do this? You are like me, who is clearly not a mathematician. I have a net worth spreadsheet. I spend a lot of time in that spreadsheet because it's fun now, because I can see progress. And that's sort of what we experience as the norm. And once you get through that fear, the people who feel fear about their first investment, once they get through that and kind of get comfortable with money going up and down, which is different from what you normally experience money to be, what we tend to find is most people get really obsessed with it, and in a really healthy way, that they are still living their best life now, which Hatch really recommends. Is we're not the avocado on toast people. Eat your avocado on toast. You're never going to save yourself wealthy by not eating avocado. But what we tend to find is people bring their own personality to it. And all this conversation we've had about how we choose investments, you have yours, I have mine. How fascinating is it to learn someone else's? So you end up talking to all these different people. I had years ago, one of my friends who started investing started talking about, like, she didn't invest in Tesla. She was looking at all the different companies that supplied to Tesla. I would never have gone down that path. Someone else is just like, I just don't even care. I just want to set and forget. And they've been wildly successful. And then someone else panics and doesn't look at their portfolio and it drops in value. Other people are like, no, I like to go in there every day because I want to buy. Like, those conversations become really interesting. And I think there is no typical investor. And I think one of the biggest myths is that there is. And as soon as we all realize that actually there isn't, and how you invest, there's as many ways to invest as there are people, the more confident everyone will get that it's you do you. And this whole thing about financial advice and telling people what to invest in, absolutely, there is a place for it. But there's also a place for people kind of making decisions, how we make decisions about our entire lives, which is very unique to us.
Yeah, for sure. I think I think we probably spend too much time talking about what's the right way to invest, or what's the right company to buy, or the right ETF to buy, or whatever. And we probably don't spend enough time just sort of, reinforcing the idea that as long as you're putting away something on a regular basis, you'll probably come out the other side okay. Do you have thoughts on that?
Yeah, I think we did. We wrote a blog post a while ago, and people who invested, now forgive me because I don't know the details, it might have been in the S&P 500, people who spread their money across the share markets over 20 years were 97% more likely to end up with more money. So, over time, the odds increase wildly. On any day, it's sort of 50-50, but over time, it gets higher and higher. So that was something that kind of, even though I knew personal experience, that was quite mind-blowing to me. But I think, like we talked a bit about zero, if you never invested in zero, that doesn't mean you couldn't independently be wealthy from a company I've never heard of that you invested in. And I think that is another myth. And we saw it with GameStop, and we've seen it with Tesla, that there is a bandwagon of people going, this is the next big thing. And that's actually one of the biggest dangers when it comes to investing, as it is with basically anything in life. It's like, buying the coolest pair of jeans because everyone else has bought them. Like, that's just never a good idea. Like, never following the crowd is never a great idea. And investing is no different. So um, I think what we've seen is, if I compared my portfolio with your portfolio, given the kind of craziness of the tech industry in the last few years, we probably have a few crossovers, but I would say that at least 50% of our portfolios would look quite different. And I would expect that with most people, because they should be unique to who we are. We all have unfair advantages. You may know a lot about tech. I may know a lot about healthcare. You may know a lot about pets. Like, pets is a whole industry. Like, use your unfair advantage. I remember early on talking to someone who worked at a hospital, and she started to say she started to recognize the brands that they were buying more of, and going into Hatch and checking and being like, no one else knows what a hospital is buying, but I know, so I can go and see which these brands are, and I probably have an insider information, not officially, into into a trend that it would be invisible to me. So I feel like that. I feel very strongly that the idea, or just putting your money all in a fund, and just sort of letting the algorithms decide, is a much smarter way of thinking about the share markets than stock tips or the right way to do things or the right way to make a choice, because it's almost a red herring. Like, who cares? As long as you make a choice, and as long as you put money aside, obviously with the disclaimer that you don't want to put all your eggs in one basket if you don't know what you're doing, or if you don't want to put all your money into a company that you don't know anything about. There are some very simple tools that you can use, like spreading your money across a lot of investments, that sort of counteract some of the risks. But like, gotta be better than sort of watching it go down in value in a bank account.
Yeah, 100%. I was actually just about to say that, what was it? I think you said something like 97% of people will make money if they're dollar cost averaging over 20 years.
Yeah, and
I
I
mean,
don't
that,
even know if it's dollar cost averaging. I think it was something I can't, like, I'm going to have to send you the article because I can't remember. But over 20 years, the share markets tend to, like,
yeah.
97% be up for people, you know?
Yeah, and I think kind of related to that, people have a weird perception of risk. Like, they view shares as very risky, which I guess in the short term they are. Like you say, if you need the money tomorrow or next week, it's probably not the place to be putting money. But I mean, another risk is always leaving money in a bank account and never actually growing anything. I'd argue that's a lot more risky of a strategy than consistently investing something that's got a pretty good track record over a very, very long period of time.
Well, yeah, I think it's such a myth in New Zealand, and I think it goes back to that 1980s share market drop, and we got burned as a country, and I'm not sure how, but we got comparatively burned more than other countries, because most other countries, investing is in their DNA. In New Zealand, it's just not. I've never been able to kind of figure out how. But I think there's so many cool quotes out there now about I'd rather lose a little bit today and learn, than risk working for every dollar I ever make in my life. And
Yeah.
I think that's sort of, I don't know why it's not talked about enough. I think we all talk about it. Like, I kind of feel like even as we're talking about it now, I'm like, surely people must be sick to death of us talking about this. But I just don't think it's talked about that much. And um, the idea that you can sort of start small and learn and put your money to work maybe just feels too good to be true, or maybe it feels like we have this, Wolf of Wall Street style idea of you need to be an expert stock picker, but it's just not that.
Yeah, yeah, I agree. And I think the human brain kind of struggles with the idea of like exponential growth and compounding as well. I think
Well, I mean,
people,
we talked about that a lot with COVID, like
yeah,
that's a great example of we had no concept of one person can make five people sick. It's sort of the same thing. Like, it's very hard to wrap your head around, but when you experience it, you really like it. Not the sick one,
yeah,
but the compounding growth one.
yeah, agreed. It's like it's a weird mental thing that just, I don't know, just hit me over the head one day a few years back. That's like, if I instead of spending this dollar, put it into I don't know, an ETF or something, that's worth a whole lot more than $1 in a few years. And then all of a sudden you just look at the world entirely differently.
Yeah. Yeah.
Whether that's, saving money or, whatever it is. It's quite motivating, actually, I think, to put a few dollars to
Absolutely.
work and then kind of see a little bit of success. And then, like you say, the regular deposits or whatever it might be kind of tend to grow.
And the other thing I think I want to interject here with the money thing, because it's not actually about money. Like, I think we always talk about people imagining diving into like a Scrooge McDuck money pool, that none of us are investing for the money. Like, we don't want to have a money pool. It's that thing of, do I buy this thing for $1 today, or do I buy myself an hour or a week freedom in the future? And when you start weighing up that calculation of going, the number of times we sit around going, oh man, I mean, even today we were talking about it before we came on this, of I wish I could just go away for an extra 2 weeks to go to this other cool thing, but I can't because I need to come back and work and do. And imagine taking that out of your life for the price of a small price now for a large, like, that's the weighing up. It's not money for money. It's something now versus like something so much bigger. It's like the little marshmallow test that they do with toddlers. But I think that's the other myth when it comes to investing, is people are sort of greedy and it's about counting your money, and it's just not. It's about buying yourself freedom. And the more you do, the more you invest, and the more you sort of trickle closer to that freedom. And I think that's the other thing I've learned recently, is I always thought there'd be this mythical date where I'd retire and never have to work again and I'd succeeded. And what I've actually started to realize in the last couple of years is it's not that. It's that life sort of evolves, that I can make a different choice now than I could make a couple of years ago. And in 5 years' time, I can make a different choice. And there's no magical day. It's just that life sort of evolves to being able to make different choices and better choices, because you have more and more security behind you. And that's something that I personally have only just realized, like, I've only been thinking about in the last month, of like, there is no mythical day, but what my life looks like now versus 5 years ago is wildly different because of my investments.
Mm-hmm. Yeah, I think that's a fantastic place to wrap it up, Nat. This has been really fun. It's been cool trying to getting to know the backstory of Hatch. I've been a happy customer and partner of Hatch for a long time now, so it's cool to get some of the inside scoop on the backstory. Is there anywhere that people can go? I mean, if they haven't checked out Hatch already, where can people go? And I see you've just started a new Instagram, so if you want to plug that or anything else, feel free.
I mean, you probably find my new Instagram from our Hatch Instagram account. Always the best place to go is hatchinvest.nz. I'm sure we've got some sort of code we can give away, which I did not organize, but I think you have one. Do you have one for
Yeah, I can put that in the description.
People can put it up. No, but I think the couple of things I would say is, if you are ready to start investing with the US share markets, join us. You will be invited into our community when you've made a deposit. Use Tom's code, sign up. If you're not quite ready yet, we have a free 10-day getting started course, which I wrote a couple of years ago. We wrote it based on interaction. It's 10 minutes a day. It's like you answer a couple of questions, like the stuff quiz every day. But you learn a little bit by little bit. So by the time you get to day 10, you actually are ready to sign up and start, and then you use Tom's code. Or if you're not even quite there yet, follow us on Instagram. We've got an incredible team on Instagram who will convince you that it's a good idea to feel better about your money situation. Or join us at a Wine and Wealth, which Kristen and I do fairly regularly, where we just talk about the basics of investing. Just take a step, even if it's not with Hatch, because it is so exciting to think about a world in which all of us are in control of our own lives and can build our best lives. So, or talk to our team is the last thing. Send us an email. We have hello@hatchinvest.nz. No question's a bad question. We have an incredible team of people whose lives revolve around us answering questions and helping people. No questions dumb. We've got heaps of stuff we can help you with. But yeah, just do something, because so many people sort of watch and go, great, I've done something. This is not something. You have to take an action for yourself.
Love it. Cool. Thanks so much, Nat. We'll have to do this again soon.
Yes, we should.
All right. Cheers.
Thanks, Tom.
Thanks for watching another episode of the Investing with Tom podcast. If you enjoyed this episode, be sure to subscribe to the Investing with Tom podcast channel so that you can see future podcast episodes as soon as they go live.